Yeah, Wednesday. What's up, Wednesday? Hope you guys are having a great day. Welcome to the Wednesday morning edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson, and we have an interesting one in store for you today because I'm going to make a pretty strong statement. I'm going to make a pretty bold claim, and I don't know that I'm going to be certain on this. But is the bear market over? I think it is. I think that we have seen the bottom for the market for this most recent bear market put in. And I'm going to talk a little bit as to why. So, if you're new to the channel, do me a favor: click the subscribe button, hit the notification bell, hit the alerts and the updates. And I want to hear your comments. Comment down below. Do you think that there's evidence that our bear market is over? We've been, seeing signs of this for the last few weeks, but yesterday was a really, really big day. And when I say a really big day, what I mean is that for the first time all year, we have put in a higher swing low and a higher swing high on a daily chart. We have for the first time by getting above this 3950 area, we've eclipsed the higher swing low that needed to be eclipsed, as well as the higher swing high. And we haven't put in a truly higher swing high and higher swing low all year. If I go back and I look, right, swing high, swing low, swing low, swing high, swing low, swing high, swing low, swing high, swing low, swing high, swing low, swing high. We did put in a higher high in the most recent move up in early May, but this is the first time that we have both a higher swing high and a higher swing low. Now, that's not my only reason for saying this. Another would be, if anybody is a follower of investors.com and you go to IBD, they talk a lot about a follow-through day. We did have a follow-through day that occurred that occurred a few weeks ago, and that follow-through day was on this candlestick right here. That was a move of greater than 1.25% on increased volume from the prior day after a count of 4 off of an established new bottom. Now, those follow-through days don't always have huge movement to come right out of it, but there was signs of accumulation from that point forward. And the signs of accumulation from that point forward were primarily that our sector rotation told us that our financials were going to roll into a little bit more of a preferred status, right? A little bit more of a preferred status. And so when I look at what happens in the S&P, this is just a heat map, but I'm looking at how Visa was up 3%, MasterCard up 2.8, ADP up 3.6, Accenture up 4%. So a lot of our financial stocks took a really big move higher. Bank of America 3.38, JP Morgan 2.4, Berkshire was up 2.6, Citigroup up 4%, Wells Fargo up 4%. And so, yeah, a lot of market was up 2%, 3%. But more importantly was that a couple of days ago when the market was down, those those financial stocks were down a lot less. And, in fact, some were actually up. Now, that doesn't mean that I'm going to trade into technology. What it means is that our rollover is about to occur, and the rollover meaning into our next clear sector rotation model. And our sector rotation model would be into financials as our big player. Well, the other piece is that our NASDAQ, which has been relatively weak over the S&P all year, has also given me a higher swing high and 3 consecutive higher swing lows, and we just got a higher swing high. Now, there's no definitive answer that says that this is going to be completely accurate, but I would still like to see, in order to really, really solidify this as a bullish move, I'd like to see volume this week finish higher than we have in the prior weeks. And that would really be my telltale sign, especially if we get above average volume on a green candlestick. I think that could be the end of this pullback. This has been a very strong pullback, as the Nasdaq itself has declined from the high to the low. about 35%, right? 35% of the NASDAQ from the high to the low. That's a pretty strong, market pullback. It's a good, healthy pullback, but I think it's a good opportunity to start looking at equities that make sense as a buyer. So that's my thought for where we are today. The other piece of information that I find kind of telling is that our VIX, our volatility index, if I take a look at the daily chart here of the VIX, we're sitting right at a key support line here on the VIX. And if we can break below that during today's trading, that certainly would tell us that fear is subsiding a bit in the pricing of the market. Now, combining that with the fact that most people, when you talk to people on the street, they are afraid. They're afraid. They're having a really hard time with what's going on in the markets overall in general, and so a lot of people are pulling their money out of the market. They're looking for other places to invest. Consumer confidence is at a very, very low point, and there's talks of a recession occurring. That's actually a good thing for the markets. There's a great quote by Warren Buffett. He says, "Be greedy when others are fearful and be fearful when others are greedy." And I think now we could be setting up for that particular time. So all that to say, when looking at opportunities, our supply level, our confirmation supply level blew right through. We made it a confirmation level for just that reason. We're now in a bigger picture upward trend. And so looking at potential entries on pullbacks, I think would be looking into being a buyer somewhere at about this level here. If we come back into there today, that would be a good area to step in and be a buyer. 39.13 by 39.02. In the NASDAQ, you get a similar picture right here at this wick over wick, which is a prior area of resistance that we were able to poke above that level. If I take a look at crude oil very quickly, just taking a real quick peek at crude, we did rally up into the supply level that we spoke about, and we have sold off from that area of supply. Our 15-minute supply area, unfortunately, didn't give us quite as good of a move. As we hit the 15-minute supply area, got a little move away, and then almost immediately poked right through the top. So the 15-minute supply area was not as effective. The 1-hour supply level got a little move away from that area. I'm going to remove it at this point. And I think that you're looking at the next leg down in crude oil. If we continue to drop, it have to get below 96. So that would be kind of the next area for price to get in on crude. Looking at gold. Gold is still chopping very much sideways. The breakdown exists below 16.95. We are also seeing a bit of bullish momentum in some of our currencies. The euro, as expected, bouncing off of that parity line. We talked about the expectation that the euro would bounce off of the parity line at 1. And I think that there is room to roam on the next area above this high. I think there's room to roam all the way up to 105. My prediction for the euro is that we would make it back up to 105, and so I think there's a lot of room to roam if we get basing right here at this level to pop up above that region. You see here we've got very clear air in there. So that's my thoughts for today. If you guys have any questions, shoot us an email, support@tradersarmy.com. I appreciate you joining. Please comment down below. Do you think that the bear market has reached a short-term bottom? Do you think that we are done going down and are about to head back up? I'm not saying we're going to put in new all-time highs, but before the end of this year, but we certainly, I think, have started to build a good quality case for a good base with the markets rallying higher. So hope you guys have a great day. I'll talk to you soon. See ya. Hey, thanks for joining us. If you like what we do, please make sure you hit that subscribe button. It's the only way the computers know that you're actually alive and really care. And go to tradersarmy.com today to learn a bit more. And if you want to see some of our other videos, click here in the box.